More than 2 years ago, the Sensex touched the 30,000 mark for the first time in history. Look at that graph. It tells you the story. And we're now back at the same level. But it has been a roller coaster ride. In February last year, as you can see, the Sensex was at 22,500 levels. But the bulls picked themselves up. And early this month, the index got back to touch 30,000. But today, for the first time in history, the Sensex has closed above the 30,000 mark. So it is a record-breaking number, conquering that crucial level. So where are we headed next? Anuj joins us now with his analysis. Anuj, what a day it's turned out to be for the Lal Street. But the big question is, what next?
Well, Goldilocks scenario playing out for market right now. Everything is going positive. There's DI buying, which has been there ever since demonetization. The FI buying has also returned, albeit in small numbers, but there is buying. And global and local cues are looking supportive. Global markets are expanding. There's also economy-facing earnings which are doing well. ACC, Ultratech. We saw with HDFC Bank what happened there. And look at the way the market is being driven by old economy stocks, banks, autos, cement, infra. This is a market which is now sensing capex expansion, which was something which was missing. And I tell you something, a lot of people ask me what next. There's clear sense of buyer's panic right now. Many experts that we speak to on channel say that they now want a correction. And I tell you something, it's not a need for correction. It's the fact that a lot of them have missed out on this market rally. And that's why it's a hope of a correction. Whenever you have hopes of a correction, markets normally don't oblige. As you saw today as well, intraday, there was a dip, but that was bought. All corrections are lasting very short and are just moving on. This is a market which is in a firm grip of bulls. And as of now, we don't see any evidence or any reason that that should change.
So the bulls are evidently charged up, but does the rally have more legs? If you take a look at the opinion on Dalal Street, the street is split right down the middle. Here's a quick snapshot of the bull versus bear argument.
What I maintained more than a year ago, that over the next 5 to 10 years, India would outperform the US and other Western markets, I think is still a valid story.
The stock market, by and large, is overvalued. I wouldn't call it bubble territory, but it is overvalued. Banks and NBFCs in particular look to be significantly overvalued. Whilst we are saying that a year hence the Sensex should be around 31,000, that's clearly not enough upside to take a conviction buy on the market.
India is the biggest allocation for us in our global emerging market funds. So we have almost 30% of our global emerging market fund in India. So every day it makes a new high, we're happy.
It's not as if we've seen big upgrades in the earning numbers for the last several months. If anything, you're seeing earning downgrades, and that will continue in my view. For the simple reason the economy is not turning around very quickly. Private investment cycle will take time to recover.